What was the thrust of the column that you wrote today?
The thrust was a little bit of a warning, which is it focuses on scarcity value. And so the idea is these giant private companies that we're talking about might go public, SpaceX and OpenAI and Anthropic. One of the reasons they're so valuable, they're raising money at these hundreds of billions of dollars valuation, is because they're scarce. It's hard to get into them. There's a whole army of people who say, hey, Akash, you want to get into this great company? I'm the guy who can get you into this great company. And so there's a premium in the valuation because they're private and they're not easy to get into.
Okay. And so eventually these companies go public. Suddenly their stock is free flowing. Everybody can get their hands on it. This is the private public premium that people talk about. I wonder, talk a little bit about examples where we've seen this. You laid out a couple of them: crypto, real estate. What happened in those two?
So, right. So the idea is when things get out there in the market, there's a less of a premium on the scarcity, right? So crypto, for a bunch of years, for as long as crypto's been around, you had to be a crypto trader. You had to have a crypto account to buy crypto. And not a lot of people did. I mean, some people did, but your average investor, they have a stock market and bond market account, typical brokerage account. So then a couple of years ago, we had the first Bitcoin ETF, and then there was this flood of all these ETFs and all these companies like MicroStrategy, now called Strategy, that basically stuff themselves with crypto and trade on the stock exchange. And so all of a sudden, all these investors who typically invest in just stocks and bonds could easily buy crypto. And
Mm.
so the scarcity of crypto disappeared. So what happened? Well, so there was a boom, which often happens. These things come on the public markets and there's a boom. Everyone gets excited. Everyone buys them. And then also what often happens is there's been a crash. And so a
Mm.
lot of these things have fallen a lot. And they peak just at the time of maximum interest of average investors. And then they crash. So Strategy now is down by 2/3. And Bitcoin is down a lot. And then all these wacky ones, there's literally hundreds, have crashed as well. And so it's a pattern that we've seen over and over again. So real estate, same thing. Most real estate is in private hands, and Brookfield and not Brookfield, Blackstone and some other private equity firms offered these funds that gave people access to this, and money poured in, and everyone was happy, and then they weren't anymore. Performance declined. With real estate, everyone tried to get out. Real estate is illiquid, and it turns out they were stuck there, and they had to ride it down. So these are just warnings that once things become more democratized or more, that everyone can buy, sometimes there's a valuation can go down just because there's not a scarcity value.
Well, let me ask you this: the crypto example is interesting because, on one hand, I mean, when I was covering crypto back in 2022, the whole thing was once we get the ETFs approved and once we get them out there, I mean, then people will really start to become familiar with cryptocurrencies broadly, even if they don't have to buy it on exchange. I mean, it will help with awareness, and that will in turn drive the price up, and maybe even people will become more comfortable with adopting it down the road. You're saying it's kind of has the opposite effect, which is that now it's readily available. I mean, could you see the argument made the other way and saying, I mean, this is how crypto, for example, like how it goes mainstream?
Yeah, look, we don't know what's going to happen in the future, right? And sometimes things do play out, over time when people do become comfortable. I mean, there's, certainly, you're not going to predict out all these years. I mean, the reality with crypto was it came out and went public, and everyone said, "Oh, I can make money on this." And I
Right.
don't think there was much thought about this as a new currency or this is a new way to invest or a new way to, manage investments. But this was just like, this is going up. I'm going to buy it. And sadly, I mean, we know this from mutual funds, we know this from ETFs. People buy what's been going up, and sadly, that is a bad way to invest. But that's what people do, and so this is what happened, right? It went up, it went public, sort of. You could get at it. It went up, and everyone bought it,
Mm.
and then it went down, which is what
Right.
always happens.
Well, and so again, trying to think about parallels here, you mentioned in your column the idea that the caveat is, look, if AI and space, for example, become huge markets and the fundamentals of the businesses will boom, I wonder if you go back to the period where all these SaaS companies started going public. I mean, was it kind of a similar story there where you had all these private companies? They weren't raising as much money, mind you. I mean, these were
Right.
less capitalized businesses, but I'm sort of trying to think about how that story played out because we kind of did see a boom in the valuations, and then they very much did come down.
Yeah, so I don't think the SaaS companies had these high valuations as private companies, as crazy as we're seeing now. So there wasn't that much of a scarcity value. I mean, maybe there was some, but they were not raising tens and $20 billion at
Right.
a time. And so I think the first part of the equation wasn't there. I think, and then these SaaS companies, when they did go public, I mean, they had real profits and real cash flow. I mean, that's a good business, right? OpenAI, you just don't know. It's really speculative how much money they're going to make, how they're going to manage all the spending on and the cash burn. I mean, so it's a different. This is a much more speculative business, so it is different. And I think people see these things as world changing, which they may be, but they're putting that valuation on them. So when they do go public, they're going to have to produce quarterly earnings and cash flow and all that stuff, and then there's going to be daily pricing on them, and that can be sobering for some of these investments.
Great. Well, Ken, I thought it was a great column. Thank you so much for coming on and talking about it. That is Ken Brown, our finance editor here at The Information.